Let me also take the conversation forward. Daljeet Singh Kohli as well as Sudeep Shah both on the show. Sudeep, Kunal was making a point that, while he remains to have a bullish bias in the index, what needs to be seen is whether there is more large cap participation. Where do you think leadership within the large caps is going to come in from if we have to clock in the next lap on the index?
Good afternoon, Manisha. See, what I feel is Kunal is absolutely right. We are not seeing any major moves, say, from HDFC Bank or Kotak, or for example, even Reliance is not moving much. But action, I guess, it's starting in ICICI Bank, Axis Bank, and even Larsen is showing some signs of picking up from here. So I feel from the large cap space, L&T, ICICI Bank, and Axis Bank would remain my top preferred picks, as well as what I feel is Axis Bank is outperforming all the other banks. Now, if you see Bank Nifty's move in the last 3-4 days and map it with Axis Bank's move, Axis Bank is outperforming. It is not only sustaining above its major moving averages, it's also trading above its previous week's swing highs now. So what I feel is from the current level, Axis Bank can be bought 95 stop loss and a target of say 1060, 1070 on the upside.
Okay, fair enough. Point taken. Daljeet Singh Kohli, just wanted to get a sense from you with respect to the latest earnings that we have seen. A couple of these cement names have actually managed to surprise, whether it was JK Lakshmi Cement or JK Cement. The volumes are better and the margins are also, seeing an expansion. What's your take on the cement space? Would you be a buyer?
Good afternoon. Yes, we will be a buyer in that segment because we have been waiting for this for quite some time. On the benefits from the input side should start flowing, and the icing on the cake is that they have been able to manage price hikes also, especially in the month of October. They had a very good price hike, and that is sustaining over the period. So, which means that there is a demand for the product, and their companies are able to pass it on to the consumers. So cement as a whole sector is doing very well. We were expecting that EBITDA per ton should improve from here onwards, and probably next quarter we'll see even better numbers from all these companies. We are holding one of the stocks in our portfolio, and we remain bullish on the sector.
Point taken. In fact, hold that thought. We'll do one thing. We'll slip into a very short break, but come back. We discuss more stocks which are buzzing in the trading session.
Back with closing trades right here on ET now. We're holding on to the closing trades, but no, not a recovery at all in sight for SBI or for that matter even Titan, which has now drifted lower. About 0.5% downtick is what that stock is currently sitting on. You've got Infosys, LTIM, Wipro. They're also just about marginally in the green. But yes, it's autos which are in top gear right now. So everything from an Axis Bank, not quite auto, but Eicher, Tata Motors, etc. They are the ones which are actually holding out very, very smartly in trade. But the one sector which has been a top performer year to date has been real estate. Here's Chris Wood from Jefferies telling us why he sees still an ongoing move in the realty sector, even in the next 4 to 5 years.
So I've got 4 property stocks in my Indian portfolio. We've entered our 3rd year of a property upturn. Now, last year when the RBI was raising rates, the property stocks did very well, I believe, in 2021, when people recognized that the property upturn was starting after, remember, a 7-year downturn. Then we had RBI raising rates, so the property stocks corrected. But although the property stocks corrected last year, the actual property upturn continued. The property upturn was not impacted at all by the monetary tightening. And then in the last few months, as the markets become more hopeful that we've seen the last of RBI rate hikes, the property stocks have rallied again. And it remains the case that, Indian property sector or Indian property stocks are very small relative to the size of the economic opportunity. You had this very dramatic regulation or reform of the property market created by the Real Estate Regulation Act, RERA, which has caused a massive consolidation amongst developers. So the surviving developers are in a very strong position because so many of the competitors have disappeared.
Okay, in fact, real estate sector, yes, that has been on an uptick, 15-year high for the index. Many stocks sitting at record high level. Daljeet, is the is the best behind us, or is there more?
I don't think the best is behind. There is still a lot more to happen. The sector is witnessing good demand. We are seeing across the various cities where the demand is very well intact, and in fact this premiumization, the bigger houses, better amenities, all those things are actually playing out very well, and these are all things which are in favor of the organized players, because the smaller players, unorganized guys, they cannot afford to do all this. They cannot offer you these amenities, etc. So I think it is all in the favor of organized players, and the pan-India players definitely are taking that advantage. We are seeing that pricing power is there with them. Most of these property developers have increased the prices over the past few months, and every time the new project comes, it's coming at a higher realization. So which is a good thing, that which will mean that they will have much better profits over the next 2-3 years. So I think this cycle will continue for another 2-3 years.
Right. Okay, that's the take coming in on the realty pack. Sudeep, let's have your take as well on if you were to buy any of the realty names afresh, which would you pick? Sudeep, you're on mute.
Yeah, sorry. Yeah, so if I were to choose any real estate stock at this point, I feel that would be Prestige Estates. See, the results in the last 3 quarters have been very good in terms of Prestige. And even if we see the stock, the price action is very, the structure is very good here. If you see the daily, weekly, and the monthly chart time frame, the stock is in an uptrend. There have been minor corrections, there have been minor consolidations, but all the dips during those consolidations have been bought into. And so what I feel is overall the entire space is looking good, but my top pick would be Prestige Estates. And in the last few days also, we have seen a good consolidation between 720 and 760, 770 zone. And today we have seen a breakout from that consolidation. So with volume. So I feel that from the current levels also, Prestige can move up to 860, 880 on the upside. And one can keep a stop loss of 765 for the same.
So that is the verdict as far as real estate stocks is concerned. But Daljeet, what about the primary market action? Cello World saw a bumper listing at that 25% gain when it listed. And tomorrow, of course, it's Mamaearth, which IPO will get listed tomorrow. What kind of gains should we expect there? And what should investors do in these names? Should they book profits on the first day itself or hold on for long-term gains?
Yeah, IPO market, I don't know how it works, what kind of valuations they get, and how do they decide on what kind of pricing they should come. Now, we have been learning throughout the last 3 decades that getting a stock at 100 times PE multiple or 5 or 6 times of sales is definitely not a good idea, unless you are so confident that it will become 10 times of sales over the next 2 years or so. And if that can happen only if that is the only company in that sector existing on earth, which is not the case. So I don't know how this valuation has been arrived and what is the, there has been good. We have seen the IPO subscription numbers are fantastic, which is a big surprise for me. I never thought that we will get this kind of subscription for this high valuation, especially in the aftermath of the 2 earlier much hyped stocks, which we have seen after 2 years now they are coming back to their listing prices, etc. So despite that, people have not learned their lesson. I don't know how things will work. We are away, obviously, as a fund, we don't invest in IPOs. We normally wait for some more after the listing and see more numbers and action happening. But in terms of my opinion also, I would definitely not invest at this valuation.
Okay, Daljeet, great to have you on the show. We'll let you go on that note. Since we're on the subject of what's happening in the primary market, we did speak with the Cello World management right after their listing, and here's what they had to tell us about the business going forward.
See, raw material price at present is very soft actually, and we feel that at least in next 1 or 2 quarters it will remain so. And accordingly, since the raw material prices are in our favor, so definitely gross profit margin has improved actually accordingly.
The export, I think so, is at the similar level of growth what we had last year, and I do not think it will shrink to anything, but it will grow because some of the segments we were not even exporting because we didn't have the capacity. So for us, definitely it looks on the growth side.